2024, Tuesday, February 9th, 2021. Call the Finance Advisory Committee meeting to order. This meeting is held electronically as per section 19(1) of the town's procedure bylaw number 6228-19 as amended due to the COVID-19 situation. Can I have a motion to approve the agenda as circulated? That's Tom and Michael. Questions or comments on the agenda? Okay, so we'll call the vote. In favor? Opposed? That passes. Declarations of pecuniary interest? None. Okay, so receipt of the minutes. Can I have a motion to receive the meeting minutes of January 19?
So moved.
Okay, Tom, and then seconded by Michael. All those in favor? Passes. Okay, so there's no delegations this evening. So we got 6.1 from Manager of Financial Management regarding corporate revenues and expenses budget line by line review. May I have a mover and seconder to put the item on the floor? So it'll be, okay, Tom and then Michael. Okay, did staff, Rachel, did you want to speak to this item?
Okay, thank you, Mr. Chair. So this item is the last line-by-line review that's to be done by FAC for this council term. So this is the corporate revenues and expenditures. So it's kind of that home for everything that doesn't really fit anywhere else in the program budgets. Mr. Gartner's here to assist with answering the questions since he has all the answers ready for you guys tonight.
Okay, we're ready to stump them.
Okay.
Good luck with that.
So does anyone want to start with any questions or comments? Okay, Michael?
Thank you. I appreciate most of the explanations are pretty, self-explanatory, especially those that, are specific to COVID and Safe Start and being these kind of one-time off changes, hopefully. We don't see too much next year, but for this year. Couple questions with regards to, first off, bank charges. So on page 7 of 13, it's line item 6001. We have actuals, but we have no budgeted amount. So for 2019, the actuals were 222,000. For 22, we're forecasting the actuals of 202,000, but there's no budget amount. Do we not budget for bank charges?
Through you, Mr. Chair, yes, we do. We're actually budgeting. What those bank charges represent are the interest on all our debenture payments. We're actually budgeting all the debenture payments, the principal and the interest under the capital loan repayment line 6,000, the one above. We probably should separate that budget into the two areas just for clarity.
That's great, because that's my second question is when I look at the capital loan repayment, I see a budget of $1.2 million, but the actuals for 2019 and the forecast for 2020 are in the 700,000 range. So we were off by 500,000. So part of that is the bank charges, but we're still off by 300,000 then. How come? From
sorry, through you, Mr. Chair, it should balance out to the budgeted amount. If it does not, I'll have to look into that.
So the 2020 approved budget for capital loan repayment was $1.2 million. The forecast to year end is 750,000 capital loan repayment and 200,000 bank charges. So that's 950,000. So that's why I say,
yeah, through you, Mr. Chair. The forecast is clearly understated. It should be equal to the budget because I know for a fact we did pay all of our debenture payments as planned. That amount represents our remaining SART debenture payments as well as our JOC debenture payments. We did make both those semi-annual payments in 2020. So I think the forecast was understated at the time.
I'll leave that with you. Perhaps you can just look into it and send me a quick email at some point just to confirm that.
Yes, sir.
No, sirs. I mean, just. Thanks. That's all I have, Harold.
Okay. Thanks. Jason, could you confirm to me in terms of the in the line 3-1201, that's the page 6 of 13. Can you explain the variance explanation, the higher 2019 revenues attributed to one-time revenue of 438.5 resulting from an HST audit? Can you just put some more context behind that for me, please?
Absolutely. Through you, Mr. Chair. The other revenue line in general picks up miscellaneous revenues that differ from year to year, but specifically the larger amount in 2019 represents every 2 or 3 years we'll hire a tax auditor. The tax auditor will come in and they'll go through all of our records and help us identify any tax deductions or rebates we didn't claim already. And so what happened here was in 2019, we engaged a tax auditor to come in and take a look at our expenditures for the past 2 years, I believe it was 2 or 3 years. And what the tax auditors generally go after is what we don't normally claim out of a normal practice is input tax credits, which is an additional tax credit you're entitled to for investments that result in an ongoing revenue stream. So this would be stuff where we've invested in, say, a recreation center that generates a revenue for us that entitles us to further tax deductions in that initial investment cost. So what's happened here is the tax auditors come in, poured over, I think it was 3 years worth of spending that the town did, and identified about $458,000 in tax deductions, tax credits that we hadn't previously claimed. And that's what that represents. So that was a one-time revenue that we enjoyed, and that went to our tax stabilization reserve.
Okay. There was one more. Page 7 of 13 on line 4-5048. Can you also provide the same context around the variance explanation, like the negative audit costs in 2019?
Yes, I can. So through you, Mr. Chair. This relates to an accrual. So this was an engagement. We engaged a consultant in 2018 to help us with our tangible capital asset reconciliation, and the actual invoice ended up coming in 2019. We booked an accrual to capture that expense in the right year in which the work was done. What happened was when the accrual was reversed in 19, the expense ended up hitting a different part of the organization. So it actually hit the Department of Finance. So what in the end, that credit that you see in 2019 is actually offset by a positive expenditure under the Department of Finance. So if you look at the corporate level, that offsets. So it's predominantly just an alignment of the expense with the accrual, wasn't all in the same location.
Okay.
So it is a one-time anomaly in 19.
Okay, and my last question is page 11 of 13. 3-1421, industrial vacant land tax class. So it seems like in 2017 and 2019 there was more volatility in the land assessment value for this class of land. What are some of the determining factors to create so much volatility in the land assessments, particularly in this class? it's been going up 14% or 16%, and then other years it's relatively flat. What causes that?
Oh, through you, Mr. Chair, my understanding is that it relates to assessment value being added to the roll, the ongoing assessment roll, and it can be volatile. So, for example, there was a large increase in 2020 of added assessment value in that category of, I think, about $5.1 million in additional value was added in 1 year. So it is a volatile line, and I think it's really driven by what comes online over the course of the previous year. So it's a tough one. It's a tough one in terms of understanding exactly what took place. But ultimately what took place in this regard is probably additional industrial vacant land that was added to the assessment. Specifically, I think it differs from year to year what's it related to specifically, but that's generally what it is. It's a little bit more volatile. But we could certainly get you a better explanation than that if you'd like.
Sure. Okay. Yeah. I'd be curious as to how vacant land just comes online. Is it because somebody went bankrupt and didn't continue to have activities there, or?
So through you, Mr. Chair, these can happen for a number of reasons. So as land gets developed and redeveloped, when land is being redeveloped, the structures are removed and then it's charged only for vacant land for taxes. And then when the structures are then added back to the land, then it would actually have the full tax where it would have the actual full class rather than just being on a land tax. So these changes happen from time to time as development occurs within the town. And these assessments are all done based on the information from MPAC.
Okay, I don't have any further questions on this item. Tom, Michael, any other questions?
I'm good, Mr. Chair.
Okay, so I'll call the vote then. All those in favor? Opposed? That passes. Next one is 6.2. Okay, that's internal audit status update. Can I have a mover? Seconder, Michael, okay, and then Tom. Rachel, did you want to speak to this one before entertaining any comments?
Sure. So through you, Mr. Chair, what we're trying to do here is get FAC caught up on some of the more recent audits that have occurred over the last year or so. So there's been a number of audits, including the first being on this list being the water billing audit. And a lot of these audits, what they're doing is they're identifying opportunities for continuous improvement and process improvement, which is the reason why we do internal audits. A number of these audits, like the water billing audit, and also the audit done recently on the procurement process that we're just working through, will identify ways that we can improve processes. So like through financial systems or other systems. So this is a bit of an overview to give you a sense of some of the recommendations that are coming out of these. And as we start to move forward and we do these audits generally about semi-annually, we'll be able to provide more information on the current ones as we go forward as to what improvements they do recommend.
Okay, so I'll start off the comments and questions. Under the development charges audit report, it talks about areas of improvement. We're documenting formal procedures to clarify responsibilities, documenting secondary review process. So is the auditor stating, or at least at this high level at this stage, that we don't have documentation stating who's looking after what, and documentation is a little bit loose, for lack of a better word?
So to you, Mr. Chair, so in this case, we have a process in place, but it's not as fully documented with an actual process flow as the way it should be. There's a lot of interaction between finance and planning and development services when it comes to development charges as well, and identifying some of those roles and responsibilities through clear documentation and process maps will help. And that was part of the suggestion as the audit, to be able to actually put those process maps in place and have more formalized documentation. We didn't run into any significant risks or errors that were found as part of the audit. So we were doing a good job and we were calculating development charges effectively, but it was a way to make sure that we get our processes clearly documented. And that's something that they recommended as part of the audit.
Okay. And it seems to suggest also that we don't have a process in place whereby we're checking off all the aggregating one side and the other in terms of the building permits issued, and it's reconciled with the DCs that are collected. So currently, once we give out these building permits, we don't have a process in place where we collect all the DCs and we kind of tag them up with the permits to make sure that we collected all those, the fees are rightfully collected. We don't have that process in place right now.
So we don't have a formal reconciliation in place, but the audit didn't find any actual issues. So the work was still getting done, but the auditor recommended that we actually put a formal reconciliation process in place to be able to ensure we continue to do good work on this going forward.
Okay. Thank you. Michael?
Thanks. I'm actually going to direct this more to Doug. So in general, I've always been, a big believer in a culture of continuous improvement, and talked over the years about, municipalities adopting the philosophy of lean process and so forth. And certainly this audit that we've done through procurement and water seems to follow that approach of kind of looking for ways to make things better and more efficient. But from an organizational perspective, do we incorporate that thought process from, be it audit or lean, in all departments, always, striving to, I guess, revisit how we do things with the goal of trying to make it, better and more efficient? And is it, I guess, formalized in any way that, there's some sort of schedule or process to it? Or really, is it just always just challenging the department heads to look at ways to do things better, more efficient, so forth?
Doug?
To you, Mr. Chair, we certainly haven't formalized an approach to anything in terms of continuous improvement in a formal way. In the past, it's been driven by individuals that had some of that expertise and some of that training. So in the past, there were directors that had, training and a passion for some of the quality control and continuous improvement processes. And so they did some things, but it wasn't at the organizational level. It was just at the individual or project level. We are doing a number of things that are more foundational. So things like our project management methodology, getting our new financial information system up to speed, the management approach to business planning. I mean, these are all fundamental things first, quite frankly, before we chew up a lot of time with a corporate-wide continuous improvement process. That being said, we're looking for these issues where we can find them. So it's not that we're oblivious to the fact that we have places where we can improve. This is actually a very small step in bringing these things forward. So when I arrived, and until you saw this report, as you may all remember, we do a partnership with the N6, and we get 2 audits a year, up to 2 audits a year. Sometimes it's 1, it depends on the workload. But we, as part of the partnership with the N6, the region provides an auditor and looks after internal audits on areas of our choice where we think there are the possibility for process improvements or efficiencies. And we'd like an outside person to come in and take a look at that. And so that's what you're seeing now for the first time, is these things actually being reported. And before they were brought in, they were acted on, but they were kind of put on the shelf, and council really didn't have much knowledge of the fact that we were even doing these things. So this is just a first step. And I know there's not a lot of information here, but we've actually come up with an audit policy and what we'll do with these and how staff will respond to them, because it was very much left to the individual departments to kind of take this report from the auditor and, you know, do with it what they may. So we're definitely formalizing that process now. And at least from these individual audits now, there will actually be a follow-up and a process to make sure we achieve the things that the auditors find or improvements that they suggest that we make. But this is a very small step in what will be something more formalized in the future as we have more information and we get off of some of the more fundamental things and be able to put more and more time into these sort of go forward things as opposed to baseline things.
And that's great to hear. You know, what piqued my interest is actually, as a follow-up to my motion on the service review process, I've been looking into municipalities and the adoption of Lean and Six Sigma and all those kind of things. And, there are a number of municipalities who have, really adopted it and even, created I guess a position or a department for it, and so some interesting things. So perhaps I'll take it offline. We'll have some more conversation, but I was actually thinking of bringing forward a motion along those lines to kind of formalize, this continuous improvement process, but we'll chat more about it and great to hear. Even though I've known we've always been doing it, I just think that some of the initiatives other municipalities had may be a benefit for us to look to incorporate or look upon, as long as we have those foundational blocks to build upon. So thanks.
Okay. Thanks, Michael. Tom, did you have your hands up earlier?
Yeah, thank you, Mr. Chair. Just quickly, I just wanted to ask about the water billing audit report. Through you to Rachel, the WAMCO water reading software. So there was no inconsistencies or irregularities found within the software. The readings are correct.
So through you, Mr. Chair, so the WAMCO reading software, right now we're doing a very manual read process. So it's by having someone go around and collect reads via the water meter reading guns. The audit did recommend that we formalize that and automate that process more, which would include the system that we're looking forward to implementing. And there's a report planned to come forward to council or to committee in April for the new WAMCO system. What the water report found is a lot of the processes right now when it comes to water is very manual. So even the process for residents to find out information about their water billing and to detect and understand where there could be issues is also very manual. And the fact that we only have read information once every 3 months for a residential client. Whereas if we move to a more modern system, we'll be able to have that real-time information and be able to actually put notifications out. And so it did speak to a lot of that, and being able to do some of that mapping and making sure that we're putting all the meters online on time. And a big chunk of what was in that water report is part of what that new modern system will do for us. The other piece would be also in the financial system, being able to actually have information in the financial system and have a customer portal in our financial system so we can automate some other things, which would include like change of addresses, tenant changeovers and things like that. Because right now the process is very manual for doing water billing at this time.
Okay. Thank you.
Okay. If there's no further questions, I'll call the vote. All those in favor? Okay. None opposed. Go on to new business. Start with you, Tom. Did you have any new business? No. Michael?
Nope, unless Rachel has a little bit of an update in terms of, COVID impact, start of the year, that kind of thing, or maybe it's too early to tell.
Rachel?
Through you, Mr. Chair, it's still fairly early for us to tell. We are still working through our year end for 2020 and finalizing our numbers. We are planning to work through year end, and our audit is scheduled for the auditors to come in April and complete our audit. So we are on track for that. We are not expecting anything too much at this time, but the thing is, as things change and, as we reopen or we close things, it has an impact, right? Both sides do. So we are planning on having a forecast update. So the forecast would be with actuals up to the end of April, and then that will come forward around the same time as when the year-end results come forward in June as well. And then at that time, we should definitely have much more information.
Great, thanks.
Thank you. Okay, well, if there's nothing else, call for adjournment. Someone move that? Tom and Michael, all those in favor? No one opposes. Okay.
See you in a
Thanks,
bit.
everybody. We'll see you guys at 7.